I almost lost everything because of these 3 trading mistakes. After years of research and analyzing countless trades, we've pinpointed the 3 most critical mistakes traders make. So in this video, I will show you the biggest 3 trading mistakes that you should be avoiding and the potential losses and risks if you don't stop making these mistakes. We'll go through how you can identify if you are currently making any of these mistakes and how to fix them. Be sure to stay till the end, because I will be revealing a bonus tip that will change the way you trade forever. Mistake number 1, trying things on the spot. What if I told you that most of your losses could have been avoided with just one simple step? Sounds too good to be true, right? Well, it's not. And if you're not taking this step, you might be making one of the biggest trading mistakes without even realizing it. There's a hidden pitfall that trips up many traders, especially those just starting out. You see, it's tempting to try out new strategies on the fly, to see something that looks promising and dive right in. But here's the problem. When you're trying things on the spot and trading them live without backtesting, you're setting yourself up for failure. Why is this so dangerous? Imagine going into a battlefield without knowing how your weapon works. You might get lucky once or twice, but eventually, that lack of preparation will catch up with you. Trading is no different. Without backtesting, you're essentially gambling with your money, hoping that your strategy works instead of knowing it does. Now, you might be wondering, am I making this mistake? The answer might be yes if you've ever felt unsure about a trade, if your results are inconsistent, or if you find yourself reacting emotionally when things don't go as planned. These are telltale signs that you're trading without a solid, tested plan. But the consequences go beyond just losing money. When you trade without backtesting, you're also damaging your confidence. Every loss chips away at your belief in your ability to trade successfully. This can lead to a downward spiral where you start questioning every decision, making it even harder to stay on course. So, how can you avoid this trap? The solution is simpler than you might think. It all comes down to one word: backtesting. By thoroughly testing your strategies before you trade them live, you take the guesswork out of the equation. You know exactly what to expect, and you can trade with confidence, knowing that your strategy is built on solid data, not just a hunch. Mistake number 2, taking trades just because you feel like it. Are your trades backed by data, or are you just trusting your gut? The difference could be costing you big time. Your instincts might feel right, but in trading, feelings can be fatal. You might think that after years in the market, you've developed a sixth sense, an intuition that tells you when to buy or sell. But what if that intuition is actually just a cognitive bias disguised as experience? Pause and think about it. Are your decisions really based on experience, or are you falling prey to the illusion of instinct? Trading is a high-stakes game, and every decision should be made with precision. When you trade based on emotion, whether it's a hunch or a gut feeling, you're not just taking a chance, you're gambling. And like any gambler, the odds can quickly turn against you. This brings us to a critical question. What is the real cost of emotional trading? It's easy to get caught up in the excitement of the market. Maybe you see a stock moving rapidly and feel compelled to jump in, thinking, I don't want to miss out. Or perhaps a sudden drop in price triggers fear, leading you to sell off positions carelessly. In both cases, emotion is steering the ship, and the result? Missed opportunities, unexpected losses, and, most importantly, a trading strategy that lacks consistency. But there's a way out of this cycle. How can you ensure your trades are grounded in data, not emotion? Let's start with awareness. The first step in avoiding emotional trading is recognizing when you're doing it. Ask yourself, why am I making this trade? If the answer is anything other than a well-researched, data-backed strategy, it's time to rethink your approach. Next, implement a plan. A trading plan grounded in data acts like a roadmap, guiding you even when the market gets turbulent. Set clear entry and exit points and stick to them, no matter how tempting it is to deviate based on a feeling. Finally, consider backtesting your strategies. This process allows you to see how your approach would have performed historically, giving you confidence that your decisions are rooted in logic, not emotion. Now that you understand the risks, you can begin to differentiate between whether you are truly truly using intuition, or is it just cognitive bias? And if the cost of emotional trading is worth it for you to keep doing it. Mistake number 3, not profiting from the losing trades. I'm going to tell you a secret. You're not failing because you're losing trades. You're failing because you're not learning from them. Imagine this. You take a trade, it goes south, and you lose money. What happens next? Do you just move on, hoping the next one will be better? Or do you pause, dig in, and ask yourself, why did this happen? Because here's the truth. Every loss is a lesson wrapped in disguise. But here's the problem. If you're not taking the time to analyze those losses, you're missing out on a goldmine of information. Every losing trade has the potential to teach you something valuable, whether it's about market conditions, your strategy, or even your own psychology. But if you're ignoring these lessons, you're not just losing trades, you're losing out on the opportunity to improve. Now, think about this. How many times have you repeated the same mistake? Have you ever found yourself in a losing streak and realized that you're making the same errors over and over again? This is a clear sign that you're not learning from your losses. And if you don't address this, you're doomed to keep repeating those mistakes with the same painful results. So, how can you stop this cycle? Start by keeping a detailed trading journal. After every trade, won or lost, take the time to write down what happened, why you made the trade, and what you could have done differently. This simple practice can be a game changer. When you review your journal, patterns will emerge. You'll start to see where you're going wrong, and more importantly, how to correct it. But it's not just about the journal. You also need to adopt a mindset that embraces failure as part of the process. Instead of seeing a losing trade as a setback, view it as feedback. This shift in perspective can transform your entire trading experience. You'll stop fearing losses and start seeing them as opportunities to refine your strategy. And here's the kicker. Those traders who learn from their losses are the ones who ultimately succeed. They understand that the path to consistent profitability is paved with lessons from every trade, good or bad. If you can master this, you'll not only stop making the same mistakes, but you'll also start turning your losses into wins. For the bonus tip, you won't believe how much progress you will make just by implementing this. Act as if there's no losing trade. When you act as if there's no losing trade, you shift your mindset from fear to curiosity. You're no longer obsessed with the loss itself, but with understanding why the trade didn't work out. This approach puts you in a constant state of learning. You begin to look for answers rather than dwell on the failure. Instead of blaming the market or your strategy, you'll analyze your decision-making process, identify what went wrong, and, more importantly, figure out how to avoid the same mistake in the future. This mindset accelerates your learning curve because you're not just accepting losses, you're understanding them. Believe me when I say this will make a huge difference in the way you see trading. You will start to see answers written on every trade, why it acted a specific way. But here's the problem. Stopping these 3 mistakes won't be enough. That's why I've made this next video, where I show you exactly what you need to succeed. So click the video and watch it to the end.